Okay. So let me hear you. Said to give. Can you hear me? It's like network is freezing me, right? Hello. Are you guys there?
Sir?
Okay. It's like the network is freezing, right?
I'm together with you guys. Where am I? It's a bit noisy. That's why my mic is off.
Okay. Okay. So let's see where we've what we've done so far. I think we're discussing is it trend? Gifts.
Yes, sir.
Okay, we stopped at the identifying trends, right?
Yes, sir.
Okay. So let's move from there. You know, after understanding, sorry, the place is noisy. If you can hear, I am using gen because there is no light, so I had to on the gen, you know, and I hate using gen because of the noise. Or you just have to manage this thing somehow. So the trend,
Okay, sir.
understanding the trend in a forex trading is very, very important. After, you know, teaching you how to understand trend, I am going to teach you what we call top-down analysis. So you can be able to know when to buy, how to buy, and when to exit the market. These are very important keys. So that's what we are going to be discussing after understanding the trend.
Okay,
so what
sir.
is the trend? A trend is simply the direction where a very particular currency pair or where the market is heading to. The direction, we can say in simpler terms, that the direction of the market, that is what we mean by the trend. Market trend. Yes. The direction, where is the market heading to? Where is it going to? Just like I've used the description of a stream last time to analyze why understanding the trend and trading with the trend is important. It's good you understand the trend and trade with the trend. Just like I've analyzed the other time, like if you're in a stream, the water usually go a particular direction. So you can imagine you going against the direction of the flow of the water. The movement for you will be so difficult. Am I communicating?
Yes, sir.
So the movement will be very difficult because the what do we call it? The pressure will be, you will be going in the opposite direction with the pressure of the water. So you will need to exert more energy to move. But what about if you are going the direction of the water? You can easily relax. You won't probably be even using your much energy to work. You can just sleep and the water will be floating you the direction of the flow of the water. You getting it?
Yes, sir.
It's just like you keeping an object on the water and you're expecting the object to go opposite the direction which the water is flowing. But that is difficult or somehow impossible if the object you have doesn't have a force by itself to move against the direction of the water.
Yeah.
Just like someone on a canoe paddling, you know, if he's paddling in the direction of the water, it's going to be easy. He can just sit on his canoe while the water will just be floating him to the direction. But if he's going against the flow of the water, it's going to demand much energy for him to paddle so he can be able to move the direction he wants to go. And that is why it's advisable we trade the direction of the trends. It makes it easier for us. So I said a trend is simply the direction of the market. We can easily say from this point, we can easily say that it is an uptrend. Can you see it?
Yes, sir.
From this very point to this very red candle where my cursor is, we can easily say it's an uptrend. So when you want to understand or you want to get the direction of the market, go to the higher time frame. And what is the time frame? The time frame is what you see from this top side of the screen above.
Yes, sir.
This is the time frame as I'm marking using the writing material. So, and as you can see that our current pair GBP USD is on a monthly time frame. Right? Gifts. Do you get that?
Yes. Yes,
So, assuming we come to the market on this monthly time frame, at this very position where I put this marker, black marker, you can say, okay, this market is on an uptrend. So you use the higher time frame to check, and you go back to lower time frame to trade. Because as you all know, that on a monthly time frame, each of these candles is being produced after one month. Hello?
Yeah. Hi.
As you can see where my cursor is, this very particular green candle takes 1 month to form. Every of these candles you see here takes 1 month to form. So once you are able to check the trend of the market, which using the higher time frame, which you know it forms after 1 month, you can now go back to a lower time frame, let's say 1 hour. So now the higher time frame of 1 month give you an idea that this market you are in 1 hour now. You see, we are on a very, we are on the same currency pair, but as you can see, this one is not showing uptrend, right?
Yes.
And the whole of this is not showing uptrend. But if you go to 1 month, it will show you in this very direction that it is an uptrend. Sorry. Let me change my direction to go to the current market. Let's change our marker to this very particular point. Hello? Gift, are you there?
Yes, sir.
I know Saidu said this thing is this place is noisy.
I'm okay now. I'm inside my
Okay,
room.
you're okay now.
Yes, sir.
I want us to use a very current example so that you won't get confused. Let's get So let's say from this black marker now, we all know that we are currently on the market, right? The market is active because today is Wednesday, right?
Yes, sir.
So this candle, this is the current candle now, where my cursor is. Can you see that?
Yes, sir.
So this very candle will close on the 30th of April. It will finish. So probably before 30th of April, it will go down and grow long to this very position. Possibly, we don't know. Or probably it may even reverse and make a green candle. Who knows? We don't know. But let's assume we are marking our trend from this black marker. Let's mark our trend so that it will be current. Can you see that?
Yes, sir.
So you see, from this marker, it shows that we are on a downtrend. To the current
Yes.
candle. You can easily see, because we have from this marker, we have more of red candles than the green. So let's go back to a lower time frame now. Let's go to 1 hour. So you see, this is our line that shows the downtrend. This very line, can you see it? This very line that I drew. Let me even reduce the height so that you won't get confused. So let's go back to 1 hour. So you see, it has disappeared. It has disappeared because it has disappeared. Why has it disappeared? Because it's not touching the current red candle. And the current red candle, you know, it takes 1 month to form. Hope you understand.
Yes.
So if we go to 1 hour, that it must disappear because this very the line previously hasn't touched the current candle, which takes 1 month to form. Because every candle, 1 hour candle is inside this very current candle that is forming now. Hope you understand the concept.
Yes, sir.
Are you confused?
No.
No.
If you go back to 1 hour, all of those 1 hour candle are inside this very candle that is forming now. You get it?
Yes.
So now if I go back to 1 hour, you will see this my red line now. Let me go back to 1 hour now. You see it?
Yes.
You see the red line now, right?
Yes.
Previously, it wasn't showing because the red line didn't touch the current candle. It didn't touch this candle previously. Okay, let me remove it again. Let me shift it again so that you understand. You see, now I shift it. It's not touching this candle. You know, this candle now is a correct candle.
Yes.
You know that?
Yes, sir.
So you see, this red line now is not touching the current candle. So let me go back to 1 hour. You see, there is no any red line now. You get it?
Yes, sir.
Because all of this candle takes 1 hour to form. Every of this candle is taking 1 hour to form. And they are inside that very current 1 month candle that is forming. Inside this candle. All of them are inside this candle now. You get it?
Yes, sir.
Please respond with confidence. Let me know. Don't Let me
Yes,
know you are
sir.
really getting it. I hope you've gotten it. Please, if you haven't get it,
Yes, sir.
just let me know. So now let me take the red line back. So let me even change the color. Seems, please, I am here so you can understand. If you are not understanding, there will be no point for me to be here. I've changed the color now. So let me take it back now. You see now, it's touching the current, this very candle. Hope you've seen it.
Yes,
Yes.
sir.
So the blue line now is touching the red candle. So let's go back to 1 hour. You will see it now. So you see it now. Because all of these candles, one hour are inside that 1 month candle. We know how many hours are in a month. We have 24 hours in a day, right?
Yes, sir.
So 24 hours times 30 will give us the total number of hours in a month. Hope you're getting it.
Yes, sir.
So now you have used the monthly time frame to know the trend. We all know that the market is currently in a downtrend. So now when you go back to 1 hour or 30 minutes, you see 30 minutes not even showing the line at all. So when you go back to 1 hour, 30 minutes, anything from 1 hour below, not even 1 hour, from 1 week below, you can trade, just trade, sell. Let your order be of more of sell than buy. Are you getting it?
Yes, sir.
Let your order be more of sell than buy. Like some traders will not take any buy trade because they know that the current trend is downtrend. So they will only wait until the market give them signal to sell before they sell. So how do you know when to sell and when to buy? That is what we are going to learn in our next class. We call that top-down analysis. TDP. Can I hear you say that?
Top-down analysis.
TDA.
TDA.
Yeah, top-down analysis. So that's what I'm going to be teaching you in our next class. Top-down analysis, how to analyze the market and know when. You see now, you will know when to sell. You can still buy. Not that you cannot buy here, but when you buy, you stand more risks of losing than when you sell. Are you getting it?
Yes, sir.
Yes, sir.
When you buy in this situation, you stand more chance of losing than when you sell. As you can see, someone that buy here from this point, where is my writing candle material? Someone that buy from this point made profit to this point. Are you getting it?
Yes.
But you see, whenever it is time to sell, it goes more than when you are buying. You see, when you buy, the impact is not much. But you see, when it goes for sale, the impact is much. Can you see that?
Yeah.
Yes.
But the person that bought from here, the impact is not much. So that is why it's good. You wait for an opportunity to sell, then you sell. And even you study your candlestick pattern very well. Gift, what is this? Can you tell me what happens here?
I think that's that bearish engulfing candle.
That's bearish engulfing. And you see, once you see this, if you study your candle, you say, wow, this is the time for me to sell. Are you getting it? So immediately this very candle now close here, you just sell. So just imagine if you sold from this point, you make profit to this point here. You see the importance of studying the candlestick. When you understand the candlestick, when I teach you the top-down analysis next week, it will be easy for you to trade the market. Very easy for you, I'm telling you this. Just study the candlestick. You can imagine, Gift, you study your candlestick or Saidu, and you see this candle here. You see, it's a sign that the market will sell and you make your profit to this point. It depends on how much you are willing to stake from your money. Just from these small moves, you can make $1,000, depending on how much you have in your account and how much you are willing to invest in the market because of this very signal you have gotten. If you are confident with your signal, study your candlestick, you can invest more and make more money from that. If you are confident with your candlestick analysis, top-down analysis, and whatsoever, from this point now, and you invest another money, that's what the bank does, and they will make billions of naira from these moves. Hello? Hello? Hello, are we back? The net. Hello, Gift.
Ah,
Okay, welcome back. My network is having issues today. Network is bad this evening. So at least, even if we end the class, in short, I'm not even teaching you anything more today. Until our next session, we'll learn the top-down analysis. But our advice that please study your candlestick pattern, understand the candlestick, so that when we come next tomorrow, it will be easier for you when I'm teaching you to the TDA, top-down analysis. You will understand it better.
okay.
So that is it. Just understand the trend, understand your candlestick. They are very important. I've told you time without number that all this candlestick tells a story. Just know very well that the market moves in 3 directions. The market moves in 3 directions: up, sideways, down. Please understand this: up, sideways, down. Up, sideways, down. It doesn't reverse. When I say sideways, moving forward. Are you getting it?
Okay.
The market doesn't reverse back. So it goes up, sideways, and down. That's how the forex market moves. So you can easily, when you see up, what you'll be expecting is sideways. You see, from here now we are having sideways. Can you see that?
Yeah.
Huh?
Yes, sir.
From this, we experience a sideways move. Then we experience down. Are you getting it? Can you see that?
Yes, sir.
Then up,
Yes, sir.
then up. You see up, then it will go sideways again, then down. Are you getting it?
Yes, sir.
That is how the market moves. So have this understanding, basic understanding. When you have this basic understanding, you can easily predict the direction where the market is heading to.
Okay.
So this is it. You've learned what a currency pair is so far. You've understand what the market trend, which is the direction. of the market is? You understand what pips are?
Yes.
You know what pips are? You understand what pips are? You know what spread are? Spread is the difference between the bid price and the ask price, right? That is what we call the spread.
Okay.
That is what we call the spread. The spread is the difference between the bid and ask price. And the spread is usually what the broker take as their commission. Are you getting it? So
Yes, sir.
you understand what a pip is. You understand the direction of and the flow of the market. You understand what a currency pair is. You understand what the major currency pair, the minor currency pairs are. You understand what the metals are. You know, there are metals. There are the currency pair, which are the GBP and whatsoever. There are the metals, which are the gold, silver, and whatsoever. They call them the metals. Are you getting it? And there are the indices. You understand? The indices are stuff like US 30, NAS 100, and there are so many of them. DAX, they are all indices. We call them indices. To understand what all these things are, but currently we are focusing on the major currency pairs of the forex trading market. So with time, we'll get to broaden our horizon to understand what will trade the indices, even the volatilities. We'll trade the metals. The metals are gold, silver, whatsoever, you know. But gold and silver are the basics, the major common metals that we have in the forex trading market. So, and now you understand and how to identify the direction of a currency pair or the forex trading market, and how to trade in it's better to trade in the direction of the flow of the market, where the market is moving. Trade the trend. Trade the trend. That is T and T. Trade the trend. T and T. Please know this abbreviation. T and T. Trade the trend. TDA. Top-down analysis. T and T. Trade the trend. Are you getting it?
Yes, sir.
So, it's like you wanted to ask question, Gifts.
No, sir.
Huh?
No, sir.
Okay. What about you, Saidu?
No, I'm okay.
Okay, you're okay.
Yes, sir.
Let's call the class for today a day. And our next class, we'll be discussing the top-down analysis. So please, I will drop this video in the group chat, possibly tomorrow. You understand? So you people can still listen and listen over and over. We'll watch it again, you know, so it can help you understand it better. The more you watch, the more you see, the more you understand. So,
yes.
Thank you for.
Thank you.
Sorry, I have a question.
Okay. Let's hear you.
I need an explanation about the open price and close price.
Okay, the open price and close price. Yes,
sir.
That is that has to do with the candle. Are you getting it? Let me remove all these things. That has to do with the candle. You see, every candle have an open price, close price, high and low. Gift, I hope you didn't forget that, right? And Gift.
I'm hearing you, sir.
I hope you didn't forget the close, open, and the
I did not, sir.
So you see, like this candle now. Let me hover my hair. You see. Now look at this candle which my cursor is on. You can see that is an open price. And what is the open price? The open price is telling you the price